Okay, this is JP. I'm going to talk about the turtle trading that Silver Futurist was talking about, that this is so awesome. I have read the newer book, the How to Make Millions with Turtle Trading or something like that. It's the same Michael Covell or something like that. So here we have Harley Davidson, and this would look like now in, in retrospect that this would be a great turtle trade. And around here you would probably want to enter, but let's say around here you would understand that okay, I'm gonna get in. And your what kind of stop loss would you set? Uh, you are around 15 euros, so you want like 10% or something, and you get shaken out on that first. If you buy there on that first dip, you get shaken out, and then you just, if you're not going back to that same trade, you are going to lose the whole thing. Entering here, you're gonna fail. By entering here, you would have succeed probably, but only if you don't raise the stop loss. If you would have raised the stop loss, entering here, you would trail the stop loss to here, keep like $2 stop loss or something like that. You get shaken out here. Great trade, but not a turtle trade. So, so to be a real turtle trader, you would need to set a stop loss that is higher than this level basically, and only on this most perfect entry. And you cannot trail it much, or you get shaken out all the way. Like if you would stay on to this point, you could not trail up here. That's like $10, or you get shaken out if you would trail because it comes here. And that happens all the time during the trade. Actually, it's very not moving at all around here. And same is this here. The whole trend you are trying to get is somewhere this kind of channel. Let's draw some channel here. In retrospect, this looks great, but let's draw the halfway line. Uh, setting stop loss anywhere on the high side of the channel would end up in very big stop loss that would remain keep you in the trend all the time. So you can actually look like hone your system and check some old graphs that what kind of movement certain stock makes and try to think that what kind of stop loss would have kept you in the trade all the time. Like from here, you would need like over $10 stop loss, which would be quite insane on $40 investment. And and when setting a stop loss, it's very important that you know the time frame you're aiming for. If you want to be a turtle trader, you need to aim for 5 years or something like that. And understand that during even a year, the movement is great, that you're going to get shaken out if the stop loss is $2 on 20 bucks. Like watch this chart and think how long you would survive with $2 stop loss. Like not for long. On some points you would have survived, like here with $2, but you get shaken out here. Of course, that would be a good trade, but it's not a turtle trade. Turtle trade, you would need stop loss be like here. So when entering here, you would need stop loss and don't trail it, or trail it really slow. And the problem with trailing slow is that if you would enter here and not trail up to here, you would survive this sell-off. But the problem is that if it would come down, the stock would start to slide and hit the stop loss around here. The stock would go down. The stop loss would be hit around here. You would actually move back in time, like 2 years. So your money has been on the trade for 2 years too long in some cases. And now you know that you just lost 2 years and now the stock is moving down. And depending where you entered, you didn't make anything. So that's the problem with turtle trading. And even in turtle trading, you need excellent entry. And what I mean by excellent entry, that you need to buy on the lower end of the channel. That's just the way it is, because they say that you can buy anywhere on the channel in the channel, but by buying on the top end of the channel, the stop loss need to be real wide, and by buying on the lower end of the channel, the stop loss could be much smaller and still work. And uh, how would the one way to know that are you on the lower end, on the higher end of the channel, is that the mentality, the whole market mentality, that it could be summer or something like that, or when the stock is more down, like here July, 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 July is high there. But and also the S&P 500 or some big index in your country, these all the stocks follow that big index. Of course, because these big stocks make the index, but also in the other way around, that when there's some sort of month sell-off, the S&P is down for the month, you can be pretty sure that you are on the like on the lower portion of the channel, and that is a good time to buy. Much better than when the S&P has been raising for a month or a couple of months or 3 months, because you're on the high end of the channel. And that's why for the long-term trades especially, you need to buy when it's on the low end, and for that reason you need bad mentality, bad times, some panic on the market, or somebody's waiting for some Fed announcement or something, and it has been sliding for a long time, like weeks. Then you know that now it's the time to enter the turtle trade because it's undervalued for the channel. But now if you understand the channel thing, uh, why would you turtle trade? Of course, you could claim that I know the channel, so I can just trade this uphill and this uphill and that uphill and that uphill, like sweet uphill, only half a year, and swing trade and here and make like many times the money that turtle trade would ever make me with less risk. That would be awesome. Make more money with tighter stop losses. And if you look like during this time, in this kind of smaller time frame, the stop loss works with much less. But even then you need to know how tight it needs to be. The stop loss is always different compared to the time. Every time frame uses but you have to look at the stock. Different stocks move in different ways and different amounts. So you need to set the stop loss on each time frame differently. But that's been like my problem too, that I sometimes say that I want to trade for long term. And then I've made stop losses that are very tight. They are for swing trading or something, or day trading suitable stop losses. And especially when people have tendency to set a stop loss, and when they lose a couple of times to those stop losses, they are in one way they start to use even tighter stop losses or not use the stop loss at all. And both ways are actually horrible ways to look at it. So that's the problem with turtle trading, that there's a lot of times that it moves sideways. There is the trend, and in retrospect, you could say that I went up this hill, but if you went up that hill, the fact that was that your stop loss was real wide, and with certain you need a lot of money to do that. Especially you need to tie your account or big portion of that account to this one trade for 5 years, and you need to risk that portion massive percentage of that amount, like entry at 20, like entry at here in any point in time, and after that you need to keep the stop loss super wide, like around here it needs to be 10. So that's like risking a lot. So that is, if you want to do that, tie your whole money, and not many people have that kind of money to be on the turtle trading thing. And the most one problem is that even this example is perfect. There is this kind of uptrend, and this is trending up. In turtle trading, the problem is that you don't have to trend before it happens. So if you're buying breakouts, like you are here and woohoo, it's breakout. But if there would not come any uptrend, you got taken out, taken out, taken out, taken out, and you got taken out with massive stop losses, like big $10 stop losses or $5 or whatever. And that would cost an arm and a leg to pay for those. And to enter with the small stop loss, uh, where is the point that you could enter with the small stop loss? It it there is very little points in this chart where that would be possible. Actually, around here, maybe in a week time, you would have perfect time that enter with small stop loss, but that would never work. For like that's no method. You cannot guess that. If you would have entered here, very tight top loss and cannot trail it at all, very hard thing to do. Entry somewhere and don't trail the stop loss. But that point would have worked with, but like I said, that is ideal spot